Well, thanks a lot for that. Let me start with the best part, which is the stock performance, right? Auto stocks have skyrocketed in 2023 with gains of anywhere between 20 to about 60%. Let's take a look at some of them. Tata Motors has been by far the best performer this year with a 62% gain, followed by a lot of the other stocks that have gained anywhere between 40 and 42%. However, it's going to be a mixed bag this time in terms of the sectoral performance. So, the volume growth momentum has remained steady for both passenger vehicles as well as commercial vehicles, but volumes are weak for the two-wheelers and tractor sector. The margin improvement though has come through because of softening commodity prices and operating leverage. So let's go deep down into the volume growth first up. Now this quarter, the passenger car segment continues to see a low single-digit growth in volumes. The street is expecting just a 5% growth in passenger cars, and there are definitely signs of demand moderation that are visible. The industry inventory levels remain quite elevated at around 330,000 units. As on September end, the demand for small cars remained very weak, while the waiting period for popular cars are also coming down. So that's a segment that has not been doing well. But looking at the other sectors, the medium and heavy commercial vehicle segment volumes are expected to rise by 18% year-on-year, while two-wheeler volumes are down 2% year-on-year and tractors are down about 3%. So these are two spaces that have not done well, two-wheelers and tractors, as you can see on the screen. Now, the margin expansion is a positive trigger for the company. The EBITDA margins of the auto OEM universe X of JLR will expand for the sixth consecutive quarter on a year-on-year basis. And this is the kind of expansion that we are expecting across the board. The strongest margin expansion will come through for a company like Maruti, followed by Bajaj Auto, Ashok Leyland, etc. Let's end with the valuation table, and if you look at it, within two-wheelers, TVS Motors now the most expensive stock, trading at almost 30 times forward, that's FY25 PE, while a couple of others like Hero MotoCorp still continue to trade cheaper than their peers because of not too much of a recovery in the rural market. Let's move on to the passenger vehicle space. Maruti is now trading at 24 times FY25 compared to an M&M trading at 17.5 times. Of course, it's not an apples to apples comparison because M&M has a tractor business as well. But let's now take it with the commercial vehicle space, where Ashok Leyland is definitely the stock that is the most expensive at 17 times, while Tata Motors at 11.5 times. There again, not an apples to apples comparison because Ashok Leyland is a pure play commercial vehicle player. But Jay Kale, who is the Senior Vice President Research at Elara Capital, joins us now to tell us what to expect. Jay, we just laid the foundation of what the sector could do this quarter, but you tell us which are the companies that could do well, which are the companies that could move to the back burner this time?